Good morning, ladies and gentlemen. A very warm welcome to you on Business Today Television. We are on the last working day of August's FNO expiry, it being the last Thursday of August. The Nifty has given a knee-jerk reaction to the imposition of fresh extra 25% tariffs on Indian merchandise exports by the US, and that's the reason why you saw the Nifty falling as much as 24,500 in opening transactions, at the moment at 24,662. So that knee jerk happened because yesterday was a holiday. Those tariffs came into impact at 9:30 a.m. Wednesday morning, and the knee jerk saw the Nifty go down all the way to 24,500, which is a 3-week low for the market. And from then on, because of short covering and FNO led changes, you've had the Nifty recovering well above 24,662. The Bank Nifty is down about 150 points, and the IT index is in pain, 1% lower. What's in top form, ladies and gentlemen, is because of news of GST rejig are auto ancillary shares. Remember, autos, the OEMs rose fairly smartly in early trade in the previous week. Now it's the time for auto ancillaries to come up in top shape. You have JTEKT India. This is a very well-known small auto ancillary which supplies to Maruti. 9.6% higher at 142.6. Remember, Maruti's parent Suzuki has also informed the government of India that it will invest 70,000 crore rupees in its Indian operations, and that's the reason, ladies and gentlemen, mostly all auto ancillaries belonging to Maruti are in top form. Look at how Subros is up. Subros adding about 2.5% in today's trade. You have Banco India 2.8% higher, 599. Banco India makes radiators that go into vehicles. You have Seat tire maker 2.4% higher, 3113. And of course, amongst OEM makers, you have a very strong move coming into Ola Electric. Ola is I think the second most active counter, 8.5% higher at 55.2 rupees per share. Ola has been in top form because of plans of GST rejig by the government of India to offset the impact of tariffs. And one more important thing I'd like to point out is the US 10-year yield. This is also, my apologies, the Indian 10-year yield, which is now spiking up a bit. To discuss this and a lot more that's happening in the bond markets, we are now joined by Ms. Rumki Majumdar, economist at Deloitte. A very good morning to you, Rumki, and a very warm welcome. We've had a bit of a issue in the bond market over the last 2 or 3 sessions. That's mainly on account of the kind of noise that is coming in from the government of India as far as the GST rejig is concerned. How do you see this spike in Indian 10-year paper to 5 months high?
Good morning, Mr. Shailendra. Yes, this is if you see the last 3 weeks, the yield has actually gone up by almost 40 basis points. This is a very sharp rise that we have seen in recent times.
Yes.
And there are quite a few factors which probably are driving this increase. One is that there is a lower expectations that the RBI might go for any further rate cuts, because right after the August RBI meeting, when it was when the governor decided for a pause after aggressive front loading rate cuts for consecutive 3 MPCs since February. It is believed that now many of the investors and even market analysts expect probably that we have come to the end of the rate cut cycle. There could be one more at the max by the end of the year. So that could be one. Second is that global policy uncertainty has actually weighed in on sentiments as well, given the fact that we yesterday we saw our the tariffs imposed on exports to the US now up by 50%. that also has weighed on investor sentiments, and that probably has led to this yield rise. And one of the other factors could be is the tax reforms. If you look at the fact that there has been a tax exemption in February, now that there's a tax reforms that has been brought, all these will have its impact on the fiscal deficit. Now there is a kind of a probably concerns regarding whether the government will be able to manage its fiscal deficit and bring it down consistently as it has done over the last 5 years. And that also could be one of the factors weighing on investors' minds. So all these three put together could have resulted in a sharp rise in the interest rates.
Okay, so this, ladies and gentlemen, is a very difficult conundrum to break. The GST rejig is boosting to some extent the equity valuations, but at the same time, because bond markets consist of deep-pocketed institutional investors, there is a fear that a lower GST collection, a lower income tax collection might force the central government to approach bond markets to borrow to keep on spending whatever it has to. So that's the reason that bond yields are a little bit worried and are now at 5-month highs. Ma'am, when you look at this GST rejig coming in announced on August 15th and likely to impact in reality somewhere in the third week of September, do you think the Indian corporates are prepared in terms of inventory management, in terms of changing the back-end GST rates? How do you think this will pan out for corporate India?
So I think clearly there is an expectation that the consumer spending will go up, and the timing of GST rate cut has been exactly at a time been done with the festive seasons. This is when Indians usually plan to do big ticket purchases for the year, be it cars or be it homes or even their daily requirements. Now, if there is a GST rate cut, clearly there will be a huge pent up demand that will probably get unleashed right after the cuts get implemented. So I think what the businesses are going to do is ramp up their inventory. We saw a lot of facts like PMI in indicators, which showed that suddenly the order numbers, the demand, domestic demand, are going up, and those are probably showing up in the PMI manufacturing and services sector. So clearly there is a huge impulse in given to the domestic demand, which will in turn will create a lot of activity in the businesses sectors as well. Given the expectations, I think this is a good news, because what we will see is investments picking up. This is something, private investments are something which has not been growing at a sustainable pace, and that is something which the government has brought up time and again. Now is the time where when you see inventory building up in order to meet that pent up demand, and given that our capacity utilization is around 78%, there will be a requirement for the businesses to quickly invest and ramp up capacity. That is a good news, and that is something which will happen. The businesses will prop up their capacity to meet that demand that is expected to go up. And tomorrow, of course, we will have our GDP numbers coming in, and probably we will give a perspective of how far the tax exemptions has actually impacted our consumption spending. So that is also something which will give another level of data to support our argument.
Okay, because you brought up GDP on your own, what is the estimate at Deloitte's end as far as the quarter gone by GDP is concerned? What are you penciling in?
So this quarter we are expecting about 6.6% growth. So most likely, because we are getting quite a lot of mixed signals. Some of the economic activities are showing very strong growth. Agriculture output has been very strong. So at least in the rural demand seems to be doing okay. Retail Association of India has actually shown a very strong growth in May and June, which clearly shows that consumption spending and retail spending has been good. So clearly, consumption spending we are expecting to be high, and that will also substantiate our argument that the tax exemption probably is already working and impacting consumption. We are all these factors. Keeping these factors in mind, we expect about 6.6% growth in the April to June quarter.
Okay. How about inflation? That's been one of the most visible victories of both the RBI as well as the government of India. We are now at an 8-year low as far as controlling prices is concerned. Is inflation a bother in your calculations as far as GDP is concerned, or has it been tamed?
Inflation has been definitely a big win for the government because it has given one more arrow in the policy reform kit so that they could bring down monetary policy as aggressively as what RBI did. It might remain low for maybe another few months as long as we see good agriculture output, because that will keep the food prices contained. Oil prices are expected to remain range bound, if volatile but range bound. So that will also keep fuel prices low. And given that in the past incidences of high inflation, a large part of the inflation was because of food and fuel prices. So both these categories being under control, I think the overall inflation will remain low at least till the end of the year. But the fact that we are expecting demand to go up and we are expecting economy to probably grow at a faster pace by the end of second half, if we see all these tax policies and the tax exemptions resulting in higher consumption, then there's a possibility that the inflation might start picking up because of because demand growing faster than the supply. And that's why investment will play a very important role. If they pick up their investment over the next few quarters by building up capacity and meeting that demand, then at least the demand supply equation can be managed. Otherwise, a stronger demand can result in higher inflation.
Okay, let's look at the other worrying part for both Mint Street as well as North Block, which is the rupee. We have the weekly chart as well as daily chart of the rupee right there in front of you, nearing a record low, and it's been a niggling concern given the way exports are likely to get impacted because of higher US tariffs. What is your outlook on our currency, Rumki? Where do you think this is headed?
So currency might depreciate because given the volatility we are seeing in the dollar in itself, and given the trade uncertainty, it will have an impact on rupee. To some extent, this depreciation will help India because it will kind of help in the weighing off some of the impact of the higher tariff, because our exports will become more competitive because of our currency becoming depreciating fast, and will probably weigh off some of the impact of the 50% tariff that the US is imposing on our exports. But our imports also get expensive. Thankfully, oil prices are quite contained, so that will help keeping our trade deficit in check. But the last few months, we are seeing trade deficit actually widening because exports have been declining, whereas imports rising. So somewhere the depreciation of currency benefits us, but as well as hurts us as well. So I think RBI will keep an eye on how fast it would let the currency depreciate, and will probably intervene through its forex, given that we have a huge forex reserve to play around with. The RBI will probably make sure there is a stability in the currency in the long term.
Okay, that's an interesting point that you mentioned. The other cause for comfort, perhaps at this point, ma'am, is record high forex reserves. Do you take heart from their level, and will they help India tide over these uncertain times?
Absolutely, because we now have a forex cover of like 11 months of imports, which is a very good number, and I think that gives RBI another instrument to ensure that it can bring the volatility in the currency down. Whenever required, it can intervene through increased dollar supply in the currency to ensure that our rupee value remains contained. So having a good reserves definitely makes sure and gives the confidence to the foreign investors as well, that India can actually support its imports for a long term. So having a forex is definitely a positive for India.
Okay, when you look at the other side of the argument, ma'am, which is the issue that we are facing with the US, do you expect broadly that sane sense will prevail maybe 6 months, 1 year down the line? This unsavory issue that has cropped up between two very large trading partners, two very large democracies, two very good friends over the last many decades. Do you think uh, people have the practical ability to put it behind respective countries and move on?
See, the two countries have actually been very good trade partners and allies for years, decades together. And this will continue, and we are expecting that India and US will come up with a trade policy in a month or two. So this uncertainty will be for a very short time. Yes, it would have an impact on our exporters, on our MSMEs, but it will be probably very short lived because the government realizes how important US is for as our trade partner, and I think the policymakers and the government members are actually working towards getting to a faster deal so that this uncertainty can be moved out of the way, and we ensure that our growth remains much more stronger going forward.
Okay. What is the grapevine that you are hearing from the government of India, particularly economic ministries, and the grapevine from corporate India as to what kind of changes or what kind of policies might be coming in the next 2-3 months to ameliorate this pain?
Um, so in terms of policy, I think what the government would probably do is to ensure that they keep the capex spending up, because that will help in ensuring that spending on infrastructure, spending on real assets continues over the year, and that is something which is very required, given that we are expecting private investments to come in, and such capex spending actually helps crowding in a lot of private investments as well. So we expect government to keep spending on capex, and I think the state governments are also bringing in a lot of reforms, which is good to hear, because we were looking at some of the reforms that like Tamil Nadu and Delhi, and then there's respective states they're bringing in to ensure there's more labor force participation among women. They are also making ease of doing better in each state. So I think those reforms will continue, and so it's not just the responsibility of the center to make sure that business improves, but it is also the responsibility of the states. And I think the states are being very proactive in these matter, and kind of bringing in reforms.
Right. On this very positive note, in a very somber situation as far as the economy and global geopolitics is concerned, ma'am, we'll call it a day. Thank you for joining us, and of course, here's wishing you all the best as far as the GDP forecast is concerned. and of course better days ahead for all of us as far as the issue between India and US is concerned. Thank you for your time.
Thank you. Thank you so much.
That, ladies and gentlemen, was Rumki Mujumdar, economist at Deloitte, India, talking about her expectations of quarterly GDP growth at 6.6%, and of course the way forward between this crisis that is upon us as far as the bureaucracies of India and US thrash out this Trump tariff tantrum. Thank you for watching.
Sudarshan Chakra, India's own Iron Dome or Golden Dome. The Honorable Prime Minister had made a mention of this on 15th of August when he spoke about Sudarshan Chakra. That will enhance